So you've probably been in some conversations and people start talking about the monetary policy and how it affects this, or the fiscal policy and how it affects that, and you didn't really feel comfortable asking what's the difference. I've been there. And so what I want to do is help you break through that uneasiness and explain to you the difference between the monetary and the fiscal policy. And I'm going to do that coming up in just a second. Hey there, it's Billy with Keep on Cash Flow, and I'm back once again to share some tactics as well as strategies that are going to help you to go out and make more money. They're going to help you to have more control over your free time, and ultimately they're going to help you to live with less stress. So as I always like to do, I'm going to ask right up front, if you find value in this video, could you go ahead and give it a like? Definitely leave your comments and let me know what it was that you liked or didn't like about the video. And then lastly, if you liked it, definitely share it with other people. It just takes a second, and I would really appreciate it. And as our community continues to grow, you would be that person that brought in a new member to the community. So I just want to thank you right up front. But let me get back to this whole thing about the monetary and fiscal policy and what are the differences between the two. And more importantly, I've been in those conversations, so I know what it's like when they're talking about it, or you're watching it on the news, whatever your channel is, whether it's Fox or CNN or CNBC, I don't really care, but they've talked about monetary and fiscal policy all the time. And because sometimes we don't take the time to actually look it up, you're here and you want to find out what the difference was between the two. But in general, both of these tools used together are tools that are used to influence a nation's economy, right? And so it just means that it makes things speed up, slow down, move faster, slower, or be healthier, or maybe you need to kind of slow down things a little bit. And I'm going to take them one by one. I'm going to start with the monetary policy. And the monetary policy of any nation state, right? And it's probably easier if I use the US because it's just the easiest. So in this example, I'm going to use the United States. I'll probably make reference to Europe because I always do that because I live in Europe and I invest in the United States. But when you look at the monetary policy, basically the monetary policy does kind of two things. Number one, manages the interest rates, and number two, manages like the amount of money that's actually in circulation. So if you can imagine, like when the central banks are able to manage interest rates, depending on if the interest rate is higher or lower, that could actually incentivize people to either make more investments or less investments, to put more money in their savings account or less money in their savings account. So once again, it's actually having a direct impact on both the interest rates as well as the amount of money that's in circulation, because if you're saving more, there's less in circulation. If you're saving less, there's more in circulation. Hopefully that makes sense. And very concretely, one of the things that the central banks do, and whether that's the Federal Reserve or the Fed, as we like to say in the States, or it could be even like the European Central Bank, they can do something very specifically like reserve ratios. And the reserve ratios are just, imagine the amount or the percentage of money that a specific bank needs to have on reserves. If that percentage is really low, then that means that the banks don't have to have as much real currency in their vaults, quote unquote, versus if the ratios were really high. And that has a direct impact, once again, on the amount of money or currency that is in circulation. So hopefully that's clear on what the monetary policy does as it relates to interest rates, as well as the amount of money that is in circulation. And then if we take a look at what the fiscal policy affects. Now, fiscal policy is really managed at the government level, and it takes care of two things. Number one, it's based on the amount of tax. So one of the big levers that any government has, and we'll say the US government once again, is they can increase or decrease the amount of taxes that they ask of their citizens, as well as the amount of spending. That's the second lever that the government has in the way that it's affected by fiscal policy. So fiscal policy is really, there's two levers. There's number one, there's the amount of tax that a government can ask of its citizens, and number two, actually the amount of spending that a government does. So if I kind of use another example, if we look at the fiscal policy of a government, you've probably heard some of these terms, and if not, I'll leave a link here and maybe go to Investopedia or something like that. But you have stimulus. A lot of times they talk about stimulus packages, and that's when the governments see that there's not actually enough business activity. So the governments themselves will start to look at how they can spend more and look to stimulate activity. A lot of times they talk about building highways or bridges and all this kind of stuff, because ultimately if the government is going to improve those types of infrastructures, they're going to have to go out and hire companies to do that. Those companies then hire employees, and they stimulate through fiscal policy to be able to do that. Sometimes you also have governments that want to spend, but they don't actually have the money to spend. So that's what they call deficit spending. And when you have governments that are spending in deficit, it usually means that they're going out and they are going out to put out some type of security, typically debt. A lot of times you've heard of a treasury bill or bonds that a government will put out, but basically saying if they will borrow money from someone and they will give them, over a fixed period of time, they will give them interest payments. So that's really fiscal policy, and that's probably what affects, I would say, us the most. And I say us meaning like the consumer, and probably most heavily affected by fiscal policy, because when our taxes are raised or our taxes are lowered, well, we have more money in our pocket or don't. And then whenever there is the type of spending that's going on that could actually create new jobs or potentially less jobs. So I know some of these policies sometimes can be a little bit crazy, but at the end of the day, really, what are they doing? They're tools to influence the nation's economy. And hopefully I've made this a little bit easier, clearer for you. I'd love your feedback. I always want it. Definitely let me know. If you liked the video, once again, remember, go ahead and give it a like. And I also like to have your comments of what you liked about the video, or what could be, I guess, even clearer in the video. So, and then once again, don't forget to share. I always appreciate it. So, and anyone who's interested, maybe lives in one country and wants to invest in another, or you live in one state and want to do it in another, I've done that for the last 5.5 years. I've written an ebook. I give you the step-by-step path that I've taken. Feel free to pick that up absolutely free. The only thing you need to do is leave your email at keeponcashflow.com/roadmap. You can find that here. I'll leave it here somewhere on the bottom. Just go there, leave your email, and I'll send that free ebook out to you. And for those of you who are really, really serious and want to take your game to the next level, I even have a course that's available for you. And if it's not today, come back when you are really, really serious about the course, and it'll be great. So hopefully this whole explanation of monetary and fiscal policy have helped to clarify things for you. You know how it impacts you, and that's it. So this is Billy Keels. Keep on cash flow. It's my 2 cents for today. And as always, hasta la próxima.